afternoon. You're watching Closing Trades 180 now. I'm Anisha Jain. With me is Aisha Faridi. And for the trading session today, we have been very range bound, just toying around that 18,600 line. Just a 20-30 point range for the longest time in the trading session today. Having said that, there are pockets which are actually outperforming. Look at auto space for that instance. The Nifty auto has hit an all-time high today. Of course, M&M is sitting high with a gain of almost 4%. You also have Bajaj Auto, which is sitting at all-time high levels. So a couple of these names are what is supporting the momentum when it comes to the Nifty auto. Defense is one pack which is definitely quite excited. The shipbuilders are actually seeing quite a bit of traction. Mazgaon Dog, the last time I checked, was high by around 15 to 20%. Ditto for Cochin Shipyard as well as Garden Reach as well. So all of these counters sitting with quite hefty gains. Bank Nifty has also managed to power ahead, almost a 300-point gain coming in. It's names like Axis Bank as well as ICICI Bank, the frontline private banks, which are actually driving the Bank Nifty higher. So quite a bit of momentum there. On the opposite hand, you have OMCs which are slipping. No surprise given the fact we saw that 2 to 3% spike in the oil prices overnight. So we're seeing a bit of a reaction due to the marketing margins slipping for OMCs. And FMCG too has seen a bit of a profit booking after it hit an all-time high level on an intraday basis. So names like Nestle, HUL, Asian Paints, these are the counters which are trading in the red after seeing a bit of a profit booking on account of the momentum that we're seeing at this point of time.
Okay, a couple of other names. AU Small Finance Bank, after that Citi downgrade, this one has not been doing well. They've downgraded the stock now to a neutral from the earlier buy, maintaining a price target, however, of 765 rupees per share. They're saying that the downgrade has come in on the back of valuations. Fundamentally, upside levers are looking limited from this level. The stock down 2.25% in an otherwise buoyant market. India Mart, though, Kotak has initiated coverage in this stock with a reduced rating, however, of 5,400 rupees per share. That also under the heat right now. And of course, Tata Chemicals, Tata Motors, the Tata Group in focus after Sunday's announcement, which is signaling now an outlined deal on building a lithium ion cell factory, a sizable investment of almost $1.5 billion in the state of Gujarat. That's, of course, keeping those particular stocks buoyant. Tata Chemicals has now shot up almost about 3% at the session highs.
Okay, but before we track the technicals of the market, let's track the weather as well. Mr. J.P. Sharma, the president at SkyMed, is joining us to talk to us about how the progress has been so far on the monsoon front. Mr. Sharma, hi, good afternoon. Thank you so much for making time and speaking with us. How many more days before the monsoon really hits the southern tip of the country?
Yeah, good afternoon. Monsoon, it continues to play hide and seek. News is not all that good. Okay. But SkyMet had given earlier also on set date, likely 7 June, with a margin of plus minus 3 days. So I think it should happen within within that margin. Okay. And most likely it should happen around 8th, 9th or so. But within that bracket, which we had predicted, it should happen, though it's not going to be a very sound start. It's not going to start with a bang. Okay, possibly a soft landing only confining to some parts. That's a Kerala region. But the good news only is at least the parameters which decide the onset of monsoon, which earlier were totally missing, they have started getting aligned now. And then rainfall will be awaited. At the moment, there is hardly any rainfall over even state of Kerala, which otherwise pours during the pre-monsoon season. So the parameters, as I said, are getting aligned. Winds are getting back to southwesterlies, which are needed. Strong winds needed for that. So wait another, I say about 4-5 days or so, it should happen. And reason main for this delay is at the moment one system coming up in the Arabian Sea, which possibly become a low pressure today or tomorrow itself and deepen further to a depression. Such system even become a storm also in the early part of June. And they move in the Arabian Sea. But let me tell you, these systems, they do not augur well for the Indian monsoon. Okay, the rainfall gets absolutely confined to the coastal region. The interior parts of South India, peninsular India, they struggle to have some good monsoon showers. Okay, so that's going to be the scenario in the next coming days. Yes.
Right. Mr. Sharma, what can you then tell us about the distribution of monsoon? Does it seem like we're headed in for a normal monsoon across the country this time?
climate prediction is below normal, and we stick to that. Okay, as far as the distribution is concerned, you see all these things, monsoon onset, its initial part of advancement, it's not linked with the overall performance of the monsoon as such. But given the scenario wherein the El Nino is all pervasive, it is becoming more and more marked, strengthening. So keeping that in mind, I don't think it's going to spare us totally, and there is a inequitable distribution in such a scenario. Earlier also we have seen during El Nino. And the El Nino, mostly it strikes the northwestern parts and the central parts. Southern parts, to some extent, they get spared, and northeastern parts, it doesn't affect much. So, but then the agri bowl, which we talk about, agri grain bowl, which is the central and the northwestern parts, they take a hit. Okay, so the distribution is not going to be pleasant, I will say, as desired, or we will say it is not going to be like that. Only some parts, yes, in pockets, it may be decent one, but that will include southern parts only, and some parts, possibly extreme northern parts, hilly areas of the northern India, but distribution is not going to be equitable. Yes.
Distribution might not be equitable, but you talked about how the southern part is likely to get more rainfall. But as you pointed out, the northern region, which is the agri belt, might get less rainfall. Could you talk to us about what could be that number? Is it going to be, let's say, 90 to 95% of normal? Could it be lower than that? Because in that case, the agri output will get impacted, and then it will have a domino effect on inflation, etc. as well.
You see, more than the number, what matters is the we call it as a spectrum distribution, the spatial and timely distribution. Even if the rain is a little less, but then if it comes timely and quantum of rain is as much needed, the deficiency may not impact us largely. Okay, but then it doesn't look like happening. The rainfall is going to be below normal in this belt. Particularly, you see the northern parts of India, as such, the monsoon arrives end of June, sometime even first week of July. So June is not the month of monsoon for North India, where that's Punjab, Haryana region, which is the agri bowl also. It largely, they have 2 months, which is July and August only. September, it starts withdrawing only. But yes, the central parts, they go through the complete almost 4 months of season, and so are the eastern parts and the northeastern parts. But then looking at this scenario, the deficiency is going to be a little large. Possibly we can see a deficiency of even from 15-20% in many of the pockets where which we talk about the central and the northern parts, well below normal rainfall over those parts. Only decent, as I said, is possibly the southern parts and the northeast India. Yes.
Sharma, on that note, we let you go. Appreciate you joining us on the show. So after the weather talk, let's talk technical as well. Kunal, when we spoke on Friday, I asked you whether we are hitting the all-time high levels on Nifty this week or not. You said yes. Do you maintain that view?
Of course, yes. I think it's gotten a bit more quicker for the index. Did not expect this today to be a 100-point odd day for the Nifty, but I think no complaints because the market breadth, the large cap movement, the sector specific movement, all of that is quite commendable for the indices. We are moving on, in a very gradual manner on the index. I think that's the most interesting part because had it been a pacey kind of an upward move for the indices and no or rather lack of support from the market internals, then I think the move could have been a bit more short-lived. But I think it's a good time that you've seen the index moves gradual, the mid-cap end of the market being a lot more buoyant than what we've seen maybe over the last many months. So I think all of that is quite positive. Would expect 18,800, 850 as the next set of targets for the index, hopefully this week.
Right. Naresh, what's your take on what's going to lead that 2% on the index and make it to the new highs?
So it has to be a bunch of stocks across the board. So we are seeing Axis Bank take a lead today. We are seeing ICICI Bank coming close to the previous all-time highs. We are seeing some bit of a rally across the auto names. It's just that the auto names do not have a very high weightage in the index. But clearly autos are one sector which is leading, whether it is Tata Motors or Mahindra and Mahindra back to a new all-time high. And even the names like Hero MotoCorp, etc. But the weightages is not as high. But so we are still not seeing the heavyweights come up in a big way. So HDFC Twins, Reliance Industries, Kotak, Infi, TCS continue to be in the sideways range or a lower drift. So expecting that is the reason I'm not as gung on the index in terms of say ideally when we are closer to an all-time high, you would expect a much bigger move beyond the all-time high. But for now, expecting a move towards 18,800, 18,900. But can we sustain and go to 19,500 looks difficult. Ideally, a new all-time high should see a much sharper momentum in the Nifty heavyweights, which is not there. So it's a slow and steady move. You want to be buying the dips on the index rather than chasing it.
Steady move, we'll take that. But in the meantime, you talked about the auto stocks, which are doing quite well. But Kunal, what should one do with the defense pack? Cochin Shipyard, Muscat Dock, they're all doing well. A lot of these names like BEL, HAL, they're all sitting at all-time high levels.
Yeah, I think you can just buy these stocks or maybe hold on.
After the gain?
BEL and HL are the most stronger ones, more predominant names. I think these stocks or the trends for these stocks have been far more stable, stronger. In fact, HL was also one of the recommendations in on my list of recommendations today. The stock had moved up, I think 3%, 4% in the first half an hour, first 1 hour of the market move, and then you've seen the move trickling to the likes of BEL, Mascot, Cochin Shipyard, etc. So I think it's again a most sector specific up move which has happened, but I think HAL and BEL are the two names which I would still continue to be bullish on, and I think would recommend a buy even at current levels.
Okay, so that's the take coming in. Naresh, you talked about the auto stocks, of course, which are looking strong, but what about FMCG? That's seeing a bit of a profit booking today, whether it's Nestle, Asian Paints, HUL, etc. What would be the recommendation for FMCG names?
So out here, HUL has started becoming interesting on a little longer term time frame if we look at it. So the stock topped out around this 2600 mark roughly back in June of 2000, April, May of 2020 itself. Then we saw a spike towards that 2800 mark again in 2021. Even in 2022, the spike was closer to this 2700 mark. So now we are getting close to that 2700 mark, setting up possibly for a momentum trade here in Hindustan Unilever. So HUL remains one of the top picks. The second one is Godrej Consumer, which has slowly and steadily trended higher. Even after the Damon deal and the gap down, the stock did well and is now getting closer to an all-time high, say 10% away, but there is an upside possibility it could go towards 1150 levels. So these are the two names which look good on every dip. The rest of the names still don't have a lot of, say, leadership structure as such, but HUL could be the one in the large cap space, and then Godrej Consumer.
Although today, of course, it's Z all the way, 4.5% is the uptick there. M&M has been leading the charge within the frontliners. There's Rain, HAL, like Anisha just highlighted, and RBL Bank, which is also going very strong. A solid over 3% move on the futures is what that stock is seeing. But specifically on autos, it's M&M and Tata Motors all the way. Kunal, if you were to initiate a fresh long, would you pick M&M or Tata Motors? Actually, I should just take a guess here.
I'll pick Tata Motors even at current levels. I think it's an attractive proposition for the charts even at current levels. After almost 1.5 years of literally no movement for Tata Motors, or rather movement in a range, I think it's come out of a big breakout for itself. So the chart patterns from 2020 lows towards 2021 highs, and then the last 1.5, 2 years of consolidation, all of that is quite typical of a possible up move over the medium to long term for Tata Motors. So would go with that. Again, I think if given the choice of extra fund surplus, then would add M&M as well.
So $550 on Tata Motors at this point of time. Where do you see it headed?
Over the near term, hoping for 600, 650 as a target for Tata Motors. But as I said, that the idea over here is more long term rather than very short term.
Okay, point taken. But on that note, we are slipping to a very short break with the news that while the pockets like auto sector are outperforming, the Nifty is pretty much flat around 18,620. Welcome back. Well, let's welcome on board Varun Goyal, the head of equity at Nippon India AIF, to discuss the market internals. Varun, hi, thank you so much for making time and speaking with us. Well, how does the market setup look like at this point of time after the earnings season and the fact that most of the volatility and the uncertainty seems to be out in the first half? Do you expect second half to be much better for the markets?
Good afternoon. Thanks for having me on the show. I think if you look at the markets broadly, we are looking at 815 rupees of Nifty EPS for FY23. if you take a 12 to 15% kind of growth over this, we are looking at Nifty EPS somewhere between 910, 920 to 950. That's the kind of range. On that basis, market is clearly trading around 19 and a half, 20 times earnings, which is a slight premium to the 10-year average. So in our view, while the rest of the year Nifty might give a 5 to 10% return, but we do expect a lot of small and mid cap ideas, which were really beaten down last year because of commodity price issues and no interest cost increases. Some of those names to start doing well. I think FY24 should be a great year for bottom-up stock picking with select ideas in banking, real estate, auto and capital goods space expected to do well.
Interesting. The one trend, Varun, that one is seeing today is the entire defense pack has been moving, very, very heavily. And many believe that, while there already have been some defense dedicated mutual funds which have been launched, more money from mutual funds is going to flow into the defense stocks. Do you also think that even after the run-up that they've already had, they still make for a good buy?
Well, I think defense as a manufacturing opportunity is going to be fairly large. I think the overall manufacturing opportunity is going to be a fairly big one. I think what will happen is not just the OEM companies, which is some of these PSU names on the defense side, not just they will do well, but some of the ancillary suppliers to these names, where a lot of them come from the private sector side, should also start doing well. We remain also quite constructive on the various consumer durable EMS companies, companies which are getting more and more into auto, especially EV related component, EWS opportunity. So I think this whole make in India or the substitution of Chinese manufacturing into India is going to be a fairly large opportunity. Of course, one has to pick up names which are adding inherent value and not just assembling operations. And therefore, we believe there is a great opportunity to do bottom-up stock picking here.
Okay, great opportunity to bottom-up stock fishing. But is that the case for financials as well? Are you doing bottom fishing there or sticking with those large private names or the one or two market PSUs?
Well, I think it looks like we are largely at the end of the interest rate tightening cycle. So from our point of view, NBFCs should start doing well in the current environment, considering the fact that cost of funds is going to peak out soon. Our view is that the auto financing as a space continues to do well. The consumer finance should hopefully pick up as the discretionary incomes kind of move up during the second half of this year. So our view is not just tier one banks, both public and private, they will do well, but also a lot of mid cap opportunities around the vehicle finance space, around the home finance space should also start to do well.
Varun, you were talking about as to how defense is a good manufacturing play. Just in light of the Tatas now coming up with that factory for lithium-ion cells in the state of Gujarat and a capex as heavy as $1.5 billion. Wanted to know, outside of defense, where within manufacturing do you find opportunities?
So we believe that auto as a space, will see a complete rethinking of the value chain. So what we are seeing is that as the IC engines get phased out, we will need a new set of vendors to come up and provide the components which are needed on the EV powertrain. So that's where we believe a lot of contract manufacturing will happen, and a lot of these companies which can cater to that should do well. Also, a lot of consumer durables, mobile phones, iPads, laptops, a lot of this this stuff which gets manufactured outside and is imported in India in very large quantities. Some of that should start getting replaced and substituted by companies in India. So that is where we believe a whole value chain or an ecosystem is getting developed. And I think third, one sector which we believe is going to be a very, very large export opportunity is chemicals. Now, last 1.5 years were very, very rough for the chemical sectors because the raw material prices went through the roof and there were demand issues as far as the European market is concerned. We believe FY24 onwards, we will see pressure being relieved on both the sides. Crude oil and various raw materials linked to that have already seen significant price correction. We also see demand getting recovered in the developed part of the world, be it Europe or US. And therefore, we expect a lot of chemical companies, especially the specialty chemical names, which went through a major earnings downgrade last year, should start seeing better times ahead. So we believe specialty chemicals, consumer durable EWS plays, defense-related value chain players, all of them should see better times in the next 1 to 3 years.
Better time coming in for the pharma industry as well, because there are green shoots of some re-rating there. Are you already nibbling in and buying some of the pharma names?
We are quite positive on the domestic formulations space. The US generic opportunity, of course, looks like has structurally derated, and the kind of profitability that Indian companies had in the last decade might be difficult to come by. But I think the domestic formulation space continues to do quite well. I think the industry is growing at 10 to 12%. Those companies who can gain market share or be present in categories which are growing at a faster pace should do well. So that's the space where we would want to do some stock picking.
Okay, so that was about the pharma space. The other beaten down space, at least till a month ago, was IT, right? Is there any case to be made to look at that sector and do bottom fishing there, or maybe there are just better opportunities available, so not a great time to look at IT?
We remain quite positive on the whole mid-cap IT space. I think the whole view about investment in tech has changed globally with the advent of AI as a new technology and the driver of growth. And because of which, I think there is a rethink in terms of the kind of slowdown expectations which were there in US are now being revisited. Our sense is some of these mid-cap IT names in India should continue to grow at 15% plus kind of growth rates for the next few years. The valuations have meaningfully corrected in the last 18 months, and therefore we believe some of these names can be good 15 to 20% compounding stories for the next few years.
Just looking at some of the other movers in trade, and of course M&M is one right on top, a 4% move there. The stock has now climbed up the 1400 level on the futures. There's Tata Motors, of course, going very strong. Maruti as well is in good gear today, 1.25% higher. L&T has been looking very strong. It's actually Axis within the banks, which is looking the strongest today off the pack. Almost a 3% move coming in here. And then, of course, there's IndusInd Bank and ICICI Bank, along with Reliance, which is also holding up nearly about 1% as we speak right now. Besides technology, Varun, what is your opinion on how pharma should be looked at? And do you think it's a contra bet which could do well? And besides pharma, which you've already given your opinion on, wanted to understand whether there are any other contra bets that you're looking at in this current market.
So we believe that the whole capex-related stories, especially on the engineering side, should continue to do well, while the valuation multiples have already re-rated quite meaningfully. But we believe that the earnings growth will continue to come. We are looking at 15 to 18% kind of growth rate for this sector as a whole, and there's still a lot of stories, especially on the small and mid-cap side, which should surprise positively as far as earnings are concerned. We also remain quite positive on the residential real estate space. I think despite the pickup in the last 18 months, the affordability for resi space continues to be quite strong. The loan to or the EMI to take home salary ratio still hovers around 35-36% at the pan-India level, which is much lower than the historical peaks that we have seen around 45% plus. So we believe that key companies, metro-based residential real estate companies with clean balance sheets should continue to do well. Some of the building material players which will kind of benefit from the residential real estate recovery should also continue to do well. And I think pharma, while domestic pharma is definitely something that we are positive on, some of the API stories or companies which have a healthy order book and clear visibility of growth might do a lot better than the US generic-based companies.
Lastly, just wanted to get your take regarding the entire new age vertical, Zomato, Paytm, Nykaa, etc. Have you looked at any of these names positively?
So we have kind of stayed away from the theme for the last 1.5 years. Even now, while some of them seem to be inching closer to profitability, we need to see when the advertising spends go up, when the marketing spends go up, and when the next chasing of growth happens. Will this profitability sustain, or we will still have pressure? So we will probably wait out a little more and see whether the arrival of profitability is really close as is being expected.
Right. Okay, Varun, great to have you on the show. Let you go on that note. Good to speak with you as always. Let's just revisit where the market is currently at. We're still holding on to that 18,700 print for the Nifty futures. On that note, let's get in some closing trades as well. Kunal, on your list?
So RBL Bank is a stock which looks attractive, and I think it's closer to 170 plus mark. That's a stock which I would look to go for in closing trade.
Right. Naresh, what about your closing strategies? Naresh, you've got to unmute yourself.
Yeah, that would be Axis Bank, clearly showing leadership. The stock is now getting closer to an all-time high. And going forward, looks like a leader stock, very similar to what happened with ICICI Bank. Expecting it to continue towards 1,000, 1,200.
Okay, so that's a closing trade coming in from Naresh, Axis Bank. For the time being, Nykaa is seeing a bit of a spike, so let's track that, and also Angel Broking, because that's now seeing a gain of around 5 to 6%. A couple of these renewable power names, the case in point being Torrent Power as well as Sterling Wilson Solar, they're also seeing a bit of a momentum. Not sure if there's any news flow, because what is driving the news flow led stocks today is definitely the defense pack. Seems like that the commentary coming in from US suggests that they're looking at sharing some technology with India when it comes to defense, and that's the reason that entire pack is quite active in the trading session, especially the shipbuilding names as we highlighted earlier, Mazgaon, Cochin, Garden Reach. These are the names which are hitting fresh highs as we speak. But on that note, slipping a very short break, don't go anywhere.
$54 points higher now. We've eased up just a tad bit from the session highs. We're still skirting around that 18,700 mark for the Nifty futures. M&M still right on top. Axis Bank, Tata Motors, L&T and Maruti still holding very, very strong. Maruti in the meantime has started work on 2 solar power plants at facilities. I don't know where exactly, but yeah, we will get you more details on this. Deepak Shinoy as well joins in on the show right now. Deepak, hi, afternoon. Autos, Deepak, that clearly seems to be one space which is flaring up. Mahindra and Mahindra already at $1,400 on the futures. Tata Motors at a 52-week high. Time to profit take, or do you think there's still further legs to go in this entire sector's rally?
Afternoon, Aisha, and I think we own M&M, so quite biased in that perspective. But yeah, I think they haven't. M&M's done very well, but a lot of the other auto companies are still lagging behind in terms of actual sales. Stock prices seem to have gone up quite a bit. So I think the expectation is that at this point, maybe, I mean, one day moves don't make a market, of course, but maybe the expectation is that the numbers will come in well. I haven't seen the monthly figures as yet. I don't think there's anything significant that's changed in May. But we'll wait for all the numbers to come in. Usually, take a look after the first week has come in. But very positive longer term, at least on the personal vehicle story and also on commercial. M&M and Tata Motors are more into the commercial vehicles play, though Tata Motors is more a conglomerate now. So M&M is a better play in that respect. We like all these companies in general. Two-wheelers are still lagging, if you ask me.
However, the numbers this time from two-wheelers was better than expected, just because the expectations were very muted when it comes to the two-wheeler space. But Deepak, what's the take as far as the defense pack goes? Do you have any investment there? Is there any name that that is on your radar?
So we do have investments. To be honest, we're a little surprised by the moves in some of these stocks today. I mean, you can't explain a 17% move in a Mazgaon dog just like that. But I think, in the longer term, the story here is simply import substitution. A large part of defense capex used to be funded from our imports. So we used to import technology, we used to import even end products from abroad. Now there's a large amount of manufacturing that's happening locally, both fresh and even from the stuff that we used to import earlier. Some parts of the of the items that we used to import are now being manufactured locally. The import substitution itself is a large play. There's a 50 to 60,000 crore capex bill that I think will move over time substantially to Indian companies, and perhaps more capex as well. Very interested in this space because it's one of the areas where there's a substantially higher impact. Other than BL, a lot of these companies are sub 25-30,000 crores in market cap, and an increase in import substitution can actually change their fortunes, to the order of 50, 100, 200%. We've seen that in Mazgaon in their results. But a bunch of others also, I think there will be a substantial improvement. We do have investments, so quite biased. But I think the next 1 or 2 years, we should see continued improvement in the financials here.
Those 2 or 3 names that you invested in, or the top 2 or 3 picks from the space?
So I think, honestly, we've, sorry, is that for me? Yeah. So we still, we're still invested in Mazgaon. We have an investment there. We have an investment in a smaller company called Data Patterns. We've been invested in a few other names in the space. This is, a initial set. Of course, the numbers have started to roll in. We're hoping that over a 5-year term, their returns will be quite good. The stocks have run up a lot. So just as a warning, we are okay investing over a long period of time. So I don't have to jump in all at once. But to anybody jumping in, you have to make sense of the price for yourself before you make a call. This is a long-term investment, so it may not necessarily pay fruit in the really short term.
Right. Okay. I must say, Deepak, there was quite a list of caveats there on whether and if to invest into the defense stocks, but get that point. Also, let's get you all the buzz from the dealing rooms. Sharad is here with all that cover. Sharad?
Well, yes, in focus we are having HBL Power Systems, and what we are hearing from dealers is there has been a sustained HNI buying in this counter in the day's trade today, and the company is expected to be a key beneficiary of the faster installation of covered systems. Now, covered system is basically your train collision avoidance system, which has been made in collaboration with the Indian Railways as well, and there are 3 approved players, and of course one of them is the company itself. Apart from this, the company is expected to get more order inflows in the coming months itself, and Indian Railways has actually planned out this covered system for at least rolling out 30,000 kilometers of track over the next 2 years. Now, of course, apart from this, there are 2 other approved players as well. One is in the unlisted space, which is Medha Servo Services, and in the listed state, there's also one more small cap company called Kernex Microsystems. Now, looking at the stock itself, HBL Power System, the stock has hit its lifetime high levels and is up more than 15% over the last 4 trading sessions. But do remember, there is no single institutional investor as is shown in the shareholding, and the company has a market cap of roughly 3,370 odd crore rupees. But there are 2 important triggers for the stock which we have undertaken, and the first one is there is expected that they would be announcing a strategic tie-up, especially in the lithium-based battery segment, and also something to watch out would be the important launches for the battery energy solutions.
Thank you, Sharad, for putting that into perspective. But Deepak, you're quite positive about the defense pack, but could the same be said for railway as well? Because in the year so far, we have seen a massive rally in a lot of these railway counters.
Again, I think the same story here plays. I believe here import substitution is a thing. We used to get a lot more done from companies abroad. Sometimes they would fund railway capex and therefore require that, for instance, if you get funding from a Japanese, from Japan, then Japanese companies would kind of do that. Now it's not so much that it's the railways placing their own orders, their own technology. A lot of the train sets and the technologies actually come from the railways themselves or in collaboration. I think this is a solid play. Again, we've invested here, but one of the things to be careful here is only that a large amount of orders here are still PSU government based. So there could be potential derailment in case, for instance, political changes happen in elections and so on. We've seen this in certain states where when the political power has changed, there have been slowdown in payment for certain contracts and so on. Those are risks that are in such PSUs or in such areas over a longer term. But I think we will continue railway modernization for a substantial amount of time. The budget was, I think, originally 400,000 crores for 4 years. We're down 2 years. We're in the third, so we should see more investments come in on the back of even the freight changes that is happening with the dedicated freight corridors in the north and the northwest and the northeast, and upgradation of the southern freight network as well. I think we're going to see a substantial amount of activity. So there's going to be money made in almost everything, from signaling to the covered systems to electrification to new train sets to Vande Bharat. I think there will be a lot of activity in the next 5 or 10 years. Very positive on the sector.
But aside of defense and railways, Deepak, what is the best way to play the entire manufacturing theme?
I think the idea here is there's other parts of things also. For instance, you have engineering, and precision engineering is another play. We've got some players there, and some of the stocks have also run up recently. The precision engineering it's a B2B space, so it typically caters to other industries. But again, India's market has been relatively small, so as manufacturing increases, these B2B players will increase. A large amount of earlier capacity additions were all in the commodity space, whether it was steel or aluminium or things like that. But now they're getting into more advanced players, whether it is semiconductors or defense or railways. You're going to need a lot more manufacturing, from cams to turbines to even pump sets also, for instance. That's another place where you're going to see a lot more demand, not just from agriculture but also from industry. So I think over here it will be, while I call manufacturing a very large sector, one area has been auto, where autos and auto ancillaries have done well. A lot of things have been developed in India, but a lot of the remaining part, whether it's the railways, heavy engineering, or precision engineering, you've not had much of a focus on domestic consumption. Some of it is export led. I think that is where we're going to see a lot more interest. Not very useful to talk about. So in a sense, it doesn't come out with those things that says buy this because it looks shiny. But I think a B2B play here, silently working under the radar, high ROCs, will emerge in the next 5 or 10 years.
Okay, the slow and steady movers there, but shifting focus a tad bit. And Kunal, this is a bit of an academic question coming in. India VIX, that has been very low at around the 11 mark. How should one read that? Is that a bit negative that the market is not having the momentum, or is it just fine at 11?
No, I think it's a lot more positive. It tells you that the sentiment of the market is not at all skeptical or bearish. So India VIX is a gauge of fear or nervousness on the market. So when the VIX is actually going down, it's actually an indication that the markets are more calm, and that's why you've seen over the last so many weeks, not just over the last many days, the volatility is just not there for the indices. We are confined into a range of 1 or 2% if we go into a consolidation. And when we tend to get into a breakout, the breakouts are also very slow and gradual for the indices. For example, we moved above the 18,400 range and we expanded the band by I think 250 odd points, and we moved higher to 18,650 mark. So the drop in VIX is actually telling you that the market mood is very slow and gradual, and it's an indication of a state of calm rather than nervousness. There would be intraday pops between the on the India VIX as and how the index goes into a correction, but the level which I think a short-term trader should actually be watching out for should be 13.5 to 14 mark for India VIX. So till the time we don't break above the 13.5 to 14 mark on the India VIX, all of these short-term corrections would be digested quite well for the markets.
Naresh, your view on a couple of these big buzzers. Piramal Pharma, which is moving on good volume. We had recently seen some delivery buying there as well. And today you also have Rosari Biotech, if you track this one, which is moving higher.
Pharma is difficult to take a call because the stock has a lesser history in terms of a price action given the demerger. But technically, the stock corrected all the way from 180 levels to 70. Has made some sort of a base at least at 70, 80. Tough to take a call whether it can go back to 110, 120 levels, but short-term trend has reversed for sure, so looks okay for the near term. Rosary on the other end looks more interesting because the stock has made a good, say, a bottom formation wherein the stock fell quickly from 700 to sub 600 levels, then saw a one-day spike, then consolidated for 2 months and now started slowly trending up. So this could take a slow and steady recovery towards the 850 to 900 levels. So Rosary looks interesting compared to the other name.
Deepak, how critical would the policy this week be, or do you think a status quo is well in the price?
Well, I think I'd be very surprised if they dropped interest rates. I'm definitely not going to raise them. Inflation is now in the corridor, so I don't think they should raise or drop interest rates yet. Even the GDP growth number that has come in above RBI's expectations. So there is no reason for them to change or tinker with rates if inflation is if within expectations and GDP growth is kind of better than expectations. But we might see something more in terms of banking regulation and regulatory changes. I don't know. I mean, we can't predict right now about what it is, but I think that may be the bigger driver of change here than interest rates. I think they will, for instance, introduce more regulation on the NBFC sector that has been coming or forthcoming for a while now. They will also, so that might, change some sort of sentiment. And also, we've seen personal loan growth at very heady levels. Now we have 11 lakh crores in personal loans. Compared to, I mean, it's now 1/4 of what we've lent to the industry, and it used to be 1/10. So personal loan, unsecured personal loan growth has been quite high. So there may be some comments about that. But otherwise, I don't see a major impact. Rates have already fallen in the market to less than 7% now on the 10-year. So I don't expect a major change this time.
Expecting a major change in the RBI policy, but there seems to be a bit of a change in the market mood at this point of time. A bit of a selling is what we are seeing, especially on Bank Nifty, which was comfortably high around 250, 300 points. It's now slipped to a gain of just around 150 points. So not a major slip, but definitely off the highest point of the trading session. It's names like EU Small Finance Bank, Kotak Mahindra Bank, Bank of Baroda, PNB. These are the names which are on the back foot today. EU Small Finance Bank, remember, has seen a couple of actually downgrades coming in after the valuations have run up, and since then we have seen a bit of a decline on this one. Naresh, if I had to ask you one name from the entire banking space which looks very strong, which would be the top bet?
So that would be IndusInd Bank. So if you look at the stock price at 1300, that is where it topped out over the last 2 years. Multiple times it has topped here. And then if you go back to pre-COVID, the stock used to be 1300. So that's a major trend change in the making. And we've seen one by one banks which were largest in the private space. We started with ICICI, then Axis has started showing leadership. And now it's time for IndusInd to do so. So looks interesting. This could go towards 1600 in the short to medium term, in the medium term.
Right. Okay. On that note, let's also get going some BTST trades. Naresh, you go first.
So first is a buy on Axis Bank, which has seen good momentum today. So stop loss at 947 and a target price of 980. Second is a buy on L&T, good momentum as well as continued buying through the day. Stop loss at 2250 and a target price of 2320.
Kunal, what about you? What are the BTST trades you are spotting?
So I'll go with the large cap name Sun Pharma as a buy. I have been bullish on the stock over the last couple of days, so maintain that stance, revising the targets to 1080 and stop loss could be trailed to 980. And BHL is the other stock which looks attractive. The stock has confirmed a breakout on the swing charts, trading about 83.5 levels. So would suggest a buy, 90 as a target, stop loss at 80.
A similar question actually to you, Deepak, as well. If you had to pick one top name, let's say one name from NBFCs, one name from private banks, and one from PSU banks, which would those three names be?
That's a good question. Actually, I probably wouldn't even take the trade if I had to pick only one, because you generally, shouldn't. Because I think some of these things are specifically in private banks. We have an investment in ICICI and Kotak. I don't think this is necessarily reflective of the entire industry. I think there will be some banks that might grow more, but I'm more comfortable with larger, more diversified banks. And which have diversified holdings. HDFC is currently going through that merger process, and we're not very enthused about IndusInd at the moment. So that's there. In public sector banks, I don't think I don't think it's a great time to hold them. I think they are priced a little bit higher than where they are likely to be going forward. SBI is a good bank. It's a phenomenal entity. It's really aggressive also. If I were to pick a PSU bank, it would be SBI, honestly. I just think the price is not right. I probably won't pick up up in NBFC now. I'll wait for RBI policy. We're expecting a lot more regulatory focus to come, at least on the top NBFCs. And some of them are priced to perfection, so you don't get a great opportunity right now. So not entering, but we might choose to buy after the RBI policy. Just sticking with the larger cap banks right now.
At HDFC Bank though, Deepak, because much of the concerns seem to be well behind us. The stock is already at a 52-week high. What concerns do you still have on how the merger is going to play out?
So there's stuff around the merger which we don't know specifically. For instance, they have a large amount of land exposure through HDFC, which they will not be able to have going forward. Of course, they'll grandfather the earlier situations, but a large amount of the housing space, for instance, when you fund developers, you have to fund them both for current projects and for land acquisitions going forward, because they need both. And for some strange reason, they keep needing money all the time. But that part of the activity will not be able to be continued by HDFC Bank, at least the land part of it. The most of the other concerns are kind of done with. But I think from a growth perspective, it's better to stick with a more with someone who has more corporate focus as well, like ICICI does. And HDFC has demerged a large amount of its other entities, insurance, the AMC. They're all independently listed so far. So ICICI and still continues to have the AMC that's unlisted. Kotak has the AMC and the insurance arms that continue to be part of it. So they will be, I think there's a more, a better corporate structure in terms of ownership as well. Nothing against HDFC Bank. I just find these two more attractive at this point.
And I stand corrected there. We're still 8% away from the 52-week high on HDFC Bank. But Deepak, what about FMCG? That seems to be clocking new highs for sure. Still continue to hold if you are already riding the wave on FMCG stocks, or do you think it's time to profit take a little bit?
So, good question. Shorter term players will probably want to prune positions, because you would have seen this reach a much higher percentage of your portfolio simply because of the run up, especially in stock names, certain stock names. We own some, we own a VBL and so on. So they're quasi FMCG, if you may, but there is. There are a lot of names over there that have run up quite recently, quite reasonably well. I would say here that some of the results are actually quite good. So Nestle has been very good on the result front as well. But a lot of them are still growing at the 8 to 10% range. I won't take names, but I would say if you're paying 80 times earnings for something that's growing at 10 to 12%, there will be a correction sometime that brings your price down without the company having to make a loss, simply because the expectations were too high. I think those are the kind of names, I mean, I wouldn't get into at this point, and I will probably prune positions if I held them. But that's one part of the process. But I think a large amount of the gain that's been happening recently is just because of the recovery. I don't think they'll be able to sustain a lot of earnings growth going forward. I think better bets are there in the manufacturing sector. More growth is there.
Just coming back to the point that we were discussing on financials, Deepak, have you looked at the entire microfinance space? It's seen stellar result in the earnings season that just went by. Credit Access, Fusion, 5-Star, you name any of these names, even Ugro, etc. Is there any name which you think is part of the investable universe?
So I think a lot of them have come out with good numbers. We haven't taken a call on any of them yet. They've done better than expected in what has been a relatively trying time. The microfinance sector isn't actually interest rate sensitive. They literally pay any interest rate that they can get, and they're paying relatively high, so 29-30% kind of rates anyways. What will happen, of course, is because of relatively recent high growth. The microfinance industry, goes through phases of high growth, and then it goes through phases when growth is low and their NPAs shoot up substantially. This might be one of those high growth phases, and the stock prices have also gone up to reflect that. But we fear that the slower growth phase and high NPA phase is probably a year away from where we are right now. So we're not keen to make too many bets here. Of course, it will depend on an individual basis. Some MFIs have done really well and controlled NPAs so far, even through bad times. So I shouldn't generalize, but in general, my fear about the MFI industry is just that. I think they've done really well. I don't think they've been bad investments in the last 1 year, 1.5 years.
Haven't been bad investments, at least in the last 1 to 1.5 years. But let's talk about some of the other buzzers as well. And Nuresh, your take regarding some of these new age tech companies. We have seen quite a bit on up move on Zomato. Is it still a buy? Nike, after being beaten down, is it finally giving a bit of a breakout?
So, been bullish on Zomato, but it's getting closer to that target price where it should take a pause at that 70-75 band. So, time to take some profits off of Zomato. Nike has started making an interesting move in the last two sessions. So, the stock made a bottom around closer to the 130 mark back in January, February, 120, 130. Recent lows in April, May were around 115. So, some bit of a pause which has come. The bottom was not very sharply hit the next time. And yesterday the volumes were high. Today the volumes are higher. So for now, would expect a bounce back towards the 150-55 mark. Once it sustains above 155, that would be the first indication a higher top is made and a possible bottom is done. So out here, even at current levels, one could take that punt to keep a stop loss below 130 and buy the dips, hoping that the bottom is already in place.
Okay, Deepak, Naresh, Kunal, we'll let you guys go on that note. Thanks as always for joining in. Let's begin.